The backend just flagged a 10.84% KOSPI crash, a single session move. The NASDAQ 100 is on track for its worst July in 22 years. The number one stock and ETF this scan surfaced? Still ahead. The QQQ confirmed a close below June's prior swing low, with the NASDAQ 100 trading lower for a third straight week so far. The SPX held a slim green close. Here's the tell. The equal weight S&P printed new all-time highs today, which is the system's rotation read. Growth is getting sold while the rest of the market absorbs the flow. The QQQ's divergence from the SPX traces directly back to what's happening in the bond market right now. The 30-year closed near 5.09% after reaching 5.16 last week, its highest since the run-up to 2008. Japan sold roughly $66 billion in U.S. Treasuries in about a month during yen defense intervention. DXY is pressing yearly resistance, and the 10-year closed near 4.61%, still above the 4.5% level, ahead of tomorrow's FOMC. TLT remains near its breakdown zone, and that bond tension is exactly what energy was trading against today. WTI broke below $80 today and settled near $79.13. The geopolitical risk premium that had been propping up crude got pulled out when U.S.-Iran de-escalation signals hit. XLE and USO both settled lower, and energy is the weakest segment the scan flagged this session. The same de-escalation that knocked oil down is part of why metals sent a different signal than you might expect. Gold is stalling near a major institutional flow pivot, not breaking down, not breaking out. Silver is showing a descending triangle, and copper pulled back into the latest close. The dollar and bond pressure the system flagged in the previous scenes don't have a clean directional read in metals yet. Gold's holding its ground, but silver and copper aren't confirming a risk-off bid. The clearest signal about where global risk appetite actually landed today came from further. The KOSPI dropped 10.84% in a single session. That flooded the alert queue. The immediate driver was a chip and AI sell-off hitting Samsung and SK Hynix, with leveraged products amplifying the move. EFA and EWJ held relative resilience, while EEM weakened. Separately, BOJ tightening and Japan's treasury sales remain macro pressure, but they did not cause Korea's crash. The KOSPI is printing lower lows and lower highs, with no clear technical floor in sight yet. Bitcoin is holding in the high 62,000 support zone, but resistance stacked from 65,000 through 67,000 is dense. That leaves leveraged traders exposed on both sides if either level breaks. With the FOMC hitting tomorrow, Bitcoin is caught between a decoupling resilience argument and near-term moving average pressure that hasn't resolved. That's the backdrop the SignalFinder Pro scan was filtering through when it locked in today's rankings. That KOSPI crash and the NASDAQ 100 remaining on track for its worst July in 22 years. That's the exact environment the scan was running against. The number one stock is still ahead. SignalFinder Pro ranked 129 entries, and what came out on top is a real read on where durable strength is sitting right now. The sector rankings came back with financials at number 1, healthcare at number 2, and real estate at number 3. In a session where growth and tech are under real pressure, the scan is surfacing financials, healthcare, and real estate. The rotation out of growth is printing in the data, and it is not a broad market liquidation. The system flags where the flow is actually going, and right now, it's not going into growth. The number one ETF on the scan is KIE, the SPDR S&P Insurance ETF. It tracks a modified equal-weighted basket of U.S. insurance companies, so its top rank is a read on financial sector leadership that goes beyond just the banks. KIE is at a watch signal in the system, and in a session where rotation away from growth is dominating, a modified equal-weighted insurance basket holding the number one ETF slot is exactly the kind of structural divergence worth tracking. And the number one ranked stock is PANW, Palo Alto Networks, the large-cap cybersecurity bellwether. What stands out is that PANW finished up 0.53%, while the broader tech tape remained under pressure. The ranking engine is scoring structural leadership, not just a one-day spike. And cybersecurity holding number 1, while the NASDAQ 100 remains on track for its worst July in 22 years, is one of the cleaner divergent signals the system surfaces. Today's diagnostic split 3 ways. AI and tech stress hit Korea and the NASDAQ 100. U.S.-Iran de-escalation pulled oil lower. Bitcoin stayed pinned between support and resistance. Against that mixed rotation, the ranking engine put financials and cybersecurity at the top. Tomorrow, watch the FOMC and whether the 30-year yield holds near 5.09%. Verify KIE and PANW live in SignalFinder Pro before drawing any conclusions. And remember, this is educational, not financial advice. Do your own homework.